Thanks for coming back for the final section of my report on the state of Tamil Nadu's finances, prepared and released in early March 2017 ahead of the budget presentation of the government. In this section, we are going to wrap up all the things we covered before, including the revenue and fiscal performance, and put it in perspective and talk a little bit about what the future holds. This year will be by far the worst year in the history of Tamil Nadu as far as financial management goes. This graph shows many of the numbers we've already spoken about in terms of revenue surplus or deficit, increase in annual interest payments, as well as increase in the overall debt over a period of government. You can see that in the 5 years of the ADMK government, the 5 years of the DMK government between 2006 and 11, there was a total revenue surplus of about 2,400 crores. Interest payments per year increased by about 3,100 crores, and the debt overall increased by about 44,000 crores, all of which and more was invested in capital investments. In the 5 years of the ADMK government, the revenue deficit itself was about 17,000 crores. Interest payments per year increased by 10,000 crores a year, and the debt increased by over 1 lakh crores, roughly 1,14,000 crores. Much of that went to finance revenue deficits. You can see the 17,000 crores, and only about 90% of it went into capital investments. If that was bad, this year's budget already called for the worst ever scenario. A 16,000 crore deficit, greater than the accumulated revenue surplus or deficit over the last 13 years. Annual payments for interest increasing by 3,000 crores and debt increasing by 40,000 crores. In fact, the 6-month numbers show that this is going to be even worse than the budget projected, and we're going to end up having roughly twice the revenue deficit this year as the last 13 years. An increase in both debt and interest payments this year than the 5 years of the DMK government combined. How do we end up with this situation, and where do we go from here? The first point that I keep returning to is the fact that the revenues of the government are growing much slower than GSDP and expenses are growing much faster. So why are the revenues growing slower? Is it because commercial tax collection is defunct? Is it because there's a lot of corruption happening? It's not clear, but further analysis will be done. What is happening to revenue expenditure? Of course, interest payments are going up, but non-interest payments, if even payments to MLAs are getting returned as not cashable, imagine what is happening to the weakest of the weak, people who are receiving old age pensions, widower pensions, disability pensions. Where is this revenue spending going? It's clear there's a lot of corruption going on. This year's revenue deficit will be more than the last 13 years according to the budget. And what I am most concerned about is when the state of finances are already so poor, the government has no leeway to deal with unexpected disasters. Unlike the way the DMK government in 2009 could deal with the slowing global economy and the 6th Pay Commission, the ADMK government has not left itself any room to deal with, for example, just in the last 6 months, demonetization, drought, Varda, oil spill, the protests, and the demise of the former chief minister. And things will get a lot worse is what I'm mostly afraid about. In addition to all this debt, in addition to low capital investment, which will lead to much lower growth, we are facing strong headwinds. I can categorically say that Vision 2023 will not turn out to be a vision but a hallucination. There is no way that the government of Tamil Nadu will achieve anywhere near the goals of the Vision 2023 document. In addition, we have major challenges looming. For example, simply the Uday scheme alone will transfer over 20,000 crores of debt from the TNEB onto the government of Tamil Nadu's balance sheet and raise all the wrong ratios like debt to GDP, GSDP, and make it difficult for us to borrow that volume of money and increase borrowing costs in terms of interest rates. In addition, the 7th Pay Commission report will have to be implemented in the next year and will most likely result in another 25,000 crore revenue expense in terms of salaries, pensions, benefits, etc. I want to conclude by putting this in perspective of every single man, woman and child in Tamil Nadu. Let's compare what the performance of the ADMK government 5 years compared to the DMK government 5 years should have been. If the ADMK government had managed revenues at the level the DMK government did and raised revenue receipts, it should have received 14,000 crores more, and in fact it received that much less, which is a loss of about 1,950 rupees per person per year. It is also spending about 30,000 crores a year less in non-interest spending compared to the growth rate of the DMK government, which is about 4,000 plus rupees per person per year. It is paying 5,000 crore rupees more in interest per year compared to the rate at which the DMK government grew interest payments over 5 years. It increased the overall debt by 37,000 crores more than the rate at which the DMK government increased the debt, another 5,100 rupees per person. And all this while growing capital investments by 25,500 crores less in its final year of government. This year will turn out to be even worse. This year's 47,000 crore increase in debt is equal to a per capita increase of about 6,500 rupees per person, and the interest payments alone will be about 442 rupees per person. Taken together, we see slower growth and spiraling debt. I would have, under normal circumstances, stopped my presentation at this point, except for the fact that the government of Tamil Nadu, in its desperation, on the midnight of the 4th of March, implemented a draconian increase in the VAT on petrol and diesel. And I felt that it was important that I address this issue before I conclude my presentation. If you look at how a government raises its revenues, there are two types of taxes, direct taxes and indirect taxes. By definition, direct taxes are progressive. The more you make, the more you pay. Income taxes are an example of direct taxes. Indirect taxes, on the other hand, like excise, like VAT, like sales tax, are indirect taxes because everybody who buys, everybody who consumes ends up paying. And what that automatically means is that poorer and middle income people will end up spending more of their income or of their net worth every year, therefore end up having more taxable goods and services, and therefore as a percentage of their income or wealth will end up paying much more in these indirect taxes than rich people who will only spend some small portion of their income or wealth and save the rest. That is why the golden standard for the proportion of taxes that should come from progressive schemes such that the rich pay more is supposed to be 65%. In all developed economies, the benchmark is 65% direct progressive taxes, 35% indirect regressive taxes. In fact, in India, it's exactly the opposite. 35% progressive taxes, 65% indirect taxes. To make matters worse, in the last 3 years, the BJP government at the center has massively hiked its dependence on indirect taxes, and in particular on excise taxes in petrol and diesel. So it has raised the level of excise from around 2.75% in diesel to over 12%, and 4.75% in petrol to over 11%, thereby keeping the bulk of the benefits of the lowering of oil price into its own coffers and taking effectively the money from the poor and the middle class compared to the rich. This move by the ADMK government yesterday is walking in the exact footsteps of the BJP government and regressively taking money from the poor and the middle class much more than the rich. It is going to hurt people widely, and it is going to raise the cost of goods like vegetables, like fish, like construction materials that have to be transported throughout the state, and is going to have a serious negative consequence on future growth because of added costs that were brought in. We may in fact even see inflation rise because of this move. But even that doesn't worry me as much as the final question I will leave you with today. Oil prices that used to be about $110 a barrel have dropped to roughly 50-ish now after going as low as 30 and coming back. And yet, we are paying roughly the same per liter of petrol in Tamil Nadu or diesel as we did when oil was at 110. Of course, that means that the central government and the state government are making much more money per liter on the backs of the common man. But that's not the biggest risk. The biggest risk to me is what happens if oil prices rise again? What happens if oil prices go back to 60 or 70 or 80 or 90 or heaven forbid $100 a barrel? What will the government then do? Will it declare itself bankrupt by not raising or in fact lowering the excise and VAT to match the oil price? Or will it allow petrol to climb to 100 or 125 or 130 rupees a litre and diesel to climb to 80 or 90 or 100 rupees a litre and basically stall economic growth and curb economic activity around? I make the point again, if you have already used every resource available and still your performance is bad, you have zero room for countering things that can happen beyond your control, such as a growth in the price of oil. With that, I conclude my fifth and final section, and thank you for having joined me for this report.